Welcome to Citrin Cooperman's Corner Chats. I'm Peter Katz of West Fair Communications, publisher of the Westchester County Business Journal, Fairfield County Business Journal, westfaironline.com, and digital newsletters to keep you fully informed. And today we're joined by Karen Henderson. Now, Karen is a partner in Citrin Cooperman's White Plains office within the Commercial Tax Services practice. Now, Karen has served clients from such varied sectors as manufacturing, healthcare, real estate, nonprofits, and foundations. And Karen, welcome.
Thank you very much, Peter. It's a pleasure.
And let's jump right into everyone's favorite subject, taxes. We're coming to the end of the year. And as the end of the year approaches and we start to get closer to tax season, what are your general thoughts about where businesses stand these days in reference to how much money they have to pay Uncle Sam?
Well, that's a loaded question, Peter. I think that businesses stand in a very good spotlight as the tax laws are written today. Right now, people are going to start to need to think about moving forward, especially the biggest change that businesses are going to expect to see going forward is that bonus depreciation is going to begin to phase out starting in 2023 and moving through 2027. Every year they'll lose 20% of that bonus depreciation, but for 2022, it will be their last year of 100% bonus depreciation. Also, for those businesses that are involved with R&D, research and development, there'll be some changes that they should definitely talk to their CPAs about in the upcoming tax year. Right now, tax rates, a C corporation is still at 21%, an S corporation or a partnership flows through to the individual and is taxed at the individual tax rates. So I think that people are in good shape right now, and we would always recommend that as you're entering the fourth quarter to contact your tax advisor and work with them on a projection.
Let's backtrack a little bit, Karen, and tell us a little bit about the nature of the work that you do at Citrin Cooperman, and how does the commercial tax practice differ from what many people are used to, which is the old 1040?
So, Peter, the commercial tax practice works with the entire picture. We work with the business and the individuals. We don't just, it's not that one is isolated from the other. You have to look at the entire picture together. And when you're doing your planning, because especially for a pass-through entity, a partnership or an S corporation or a limited liability company, there are a lot of implications at the individual level.
Now, how was it that you became interested in getting into the tax field? What is it that attracted you to taxes?
What really attracted me to taxes is I like a puzzle, but I like a beginning and an end of the puzzle. So for me, it's the fact that I start with a set of numbers and I work through the entire thing and I come up with an end product. And it's the planning part of this. There's a lot of interesting things that go on when you get to know your clients and you can work with them to plan accordingly.
Now, tell us a little bit about your own background and your own work experience in the tax field.
So I've been in the tax field over 20 years now. I've been with a variety of firms. As you mentioned, I now work with Citrin Cooperman as a partner. And it's been great. I mean, I have seen the progression of tax through the years. And I would say that right now, as we're looking at the tax landscape, it is one of the most complex that we have seen.
Most people couldn't imagine that the tax code could get any more complex than it is. How do you manage to keep up with the complexities and the changes?
Well, I'm very fortunate here at Citrin Cooperman because we have constant training. We have people that are thought leaders in every area that anybody could imagine, and we are constantly keeping up, whether it's through self-education, reading publications. There's no lack of knowledge and information out there. And I'm going to admit it, I read the tax code.
Well, I can't imagine anyone curling up with the tax code instead of a good novel or something like that. Are there particular things in the tax code that either are so complex even you have to ask for help to figure them out, or are there things that are very straightforward? How do you plow through something as dense as the tax code?
Well, now when I say I read the tax code, I only read it in the pieces that I need to know about. I'll give you a for instance. Somebody brought up to me today, if their S corporation election is terminated, what happens? What occurs? Is it a taxable event? I had to go to the code and to some of my colleagues and talk this through. And I was very fortunate because I have the depth of resources here at Citrin Cooperman that I have those colleagues to turn to. And we can really evaluate things based on all of our individual experiences.
And when you go in to see a client, let's say for the first time, are there particular things that you look for based on your experience that might be clues as to whether something egregiously wrong is going on with the way the client has been approaching taxes for however many years they've been in business?
When we meet with clients, one of the things we look for are strong internal controls within their organization. If they don't have strong internal controls, there are a lot of things that could be falling through the cracks. So we try to ask how often they are actually looking at their own books and records. Are they reconciling their bank statements monthly? Are there checks and balances as to who can cut a check, who can sign a check, who can reconcile a cash account? We look at things like their AR and the aging, their payables and their aging. So there are definite signs that we look at when evaluating clients and talking to them about their businesses. That's where we can begin to give some additional guidance. We are not just tax preparers here, Peter. We are business advisors and we get to know the owners and the businesses.
That sounds like a very intensive process. Is that a fair description?
I would say it's a thorough process.
Thorough. Okay. What information should a business owner have prepared for you or another member of your team who first walks through the door and says, okay, let's go to work. Let's take a look at your tax situation?
So they should have available a balance sheet and a P&L for their year end. They should have available a listing of every fixed asset addition and disposal that took place during the tax year. They should be able to identify the large transactions. By that, I mean, if they had a large sale, did they sell their building? Did they take on an additional shareholder if they're a pass-through entity? Did somebody unfortunately pass away and we're dealing with an estate instead of the individual?
So, in other words, it's up to the business owner to identify the significant events. And then once you sit down, you can fill in and see what holes there are in what they've been presenting to you.
Well, normally what happens is at the beginning of an engagement, they're provided with an information request. If we get a look at their trial balance or their balance sheet and P&L, we can go through and ask those salient questions.
Now, based on your experience, are there patterns that you see from business to business where there are certain items that just seem to be overlooked no matter where you go in servicing your clients?
Well, I think that's a great question. I think in today's world where everything is moving so quickly and we're all generally utilizing the internet, that businesses are not aware that they are potentially creating nexus in a lot of different jurisdictions and possibly have filing requirements in those jurisdictions. And I think we're all aware that the jurisdictions and the taxing authorities are very much on top of this right now. I think also in the world of cryptocurrency, Venmo payments, that they're not aware that all of a sudden they're going to start receiving tax documents and that they've had a lot more taxable transactions than they realized.
So this would be a situation then, if I understand correctly what you're saying, where a business which may not have a presence in a particular state or municipality may actually have a tax liability just because they're doing business over the internet with customers.
That is very possible. They also could have a sales and use tax potential issue in that jurisdiction. They could, are they registered to do business in that jurisdiction? Have they filed unclaimed property reports in that jurisdiction? There are lots of areas where businesses think that it's just the sale, and it opens the doors for a lot of other things that you really need to disclose and discuss with your tax advisor.
Well, this sounds like one of those obscure situations that can actually bite people when they're just not aware of what's going on and don't have the expertise of someone who is aware of what's going on to rely on. Is that something that you find fairly commonly as you meet with new clients?
Yes, we do. We find that, business owners, they are very focused on growing their business. And they had to, in the last couple of years, shift quickly in a lot of instances. And as you so succinctly said, they were not aware that by virtue of putting their product out on the internet, they could have a lot of other tax implications. Everybody's staff, everybody has employees that are all over the place now. I hire a staff person in Utah. Now I potentially have a tax filing obligation in Utah. Am I registered to do business in Utah? Is my workers' compensation insurance covering me in that jurisdiction? You run into a lot of things that people are very unaware of. And a business owner is going to look at it and say, is that person capable of doing the work remotely? But oftentimes they're not aware that all of a sudden that it starts a filing obligation for the entity in that jurisdiction.
Without violating any confidences or ethical considerations, as you go into new businesses, do you sometimes find horrible situations that literally make the hair stand up on the back of your neck and cause you to tell the client, hey, we have to do something about this immediately?
I have been very fortunate in my years in business that I have only once had to actually present to the client, to the new client, and say, either this entire situation gets corrected or we cannot be associated with that. And it was that egregious of a situation where, as CPAs, we are licensed professionals and we had to look at protecting ourselves.
In the news these days, we occasionally see stories about businesses that are caught cheating on taxes and so forth. Is that an aberration? Are most business people very concerned and honest when it comes to tax situations?
I would like to say that here at Citrin Cooperman, our clients understand the importance of being honest and forthright with us, and that we have good working relationships with our clients. So yes, they know how to provide us with the appropriate books and records.
Is there a situation where the tax code has become so complex that business owners, especially those who run a family business or a small business, really should not be jeopardizing or potentially jeopardizing their business's situation by trying to do their own taxes? Is it almost a necessity these days to call upon an expert?
Absolutely. I think that in the example I gave, people are very unaware oftentimes that they are creating nexus to particular jurisdictions or that they have reporting requirements. Cryptocurrency, for instance. There's a lot of reporting issues around cryptocurrency that people are very unaware of. So yes, it has become a necessity, not a luxury, to call a CPA.
In which circumstances is it better for a business owner to also have the accountant, the tax expert, handle the personal side as well as the business side?
In all instances. It is really to the benefit of the taxpayer and the business owner that your tax professional be well versed in your individual situation as well as your business situation. There's a lot of interplay, and to have that separated, you are potentially missing out on a lot of tax planning opportunities.
And would that also feed into doing things like estate planning or setting up trusts, as the case may be? Or is that something that should be segregated from the business?
Absolutely not. You should be working with your tax advisors on the entire picture. There is nothing that I can think of in my background and my professional opinion that is going to benefit you from segregating that. You want somebody who understands your business inside and out and understands what you're facing in setting up trusts, in discussing succession planning.
These days, are there general situations in which it's better from a tax standpoint to be running a C corp rather than an S corp or other type of pass-through entity, or are the lines so blurred that each situation has to be looked at in depth?
That is really the answer is it depends. Before the Tax Cuts and Jobs Act made the corporation income tax rate 21%, C Corps had really seen their heyday. And everybody had gone to a pass-through entity, particularly an S Corp versus a partnership in most cases. C Corps have seen a resurgence in the last couple of years. There are very specific issues with C corporations versus S corporations. As we all know that an S corporation, you can have tax-free distributions to the extent of basis. In a C corporation, the money you take out is going to be wages or dividends, taxable. Everybody knows the term double taxation. You're going to be taxed at the entity level and again at the individual level. Now, if you're an S corporation, the IRS will scrutinize any monies that are taken out very closely by a shareholder employee because they're looking for misclassification, potential misclassification.
So it sounds as if you have not only the tax code to deal with, but also basic labor issues that go into your helping a client establish a proper strategy that's going to save as much as possible in terms of what has to be sent to the various governments.
It's always a very thorough process, and we like to start with our clients early in the year. This is not something where you should just talk to your tax advisor. If you have a business and you're talking about doing succession planning, this is something that needs to be worked on during the course of the year. This is not a December 15th issue generally. You want to be discussing with your tax advisor at different points during the year how the business is doing, what you see going on. Is there anything changing? We have people now that are in the commodity business, and basically daily the price of their product is fluctuating.
So we're no longer really in a world for the successful business person anyway, where you can wait until March 14th or April 14th, as the case may be, to start thinking about taxes.
So Peter, I'm betting that was supposed to be humorous because you should never wait till March 14th or April 14th to start thinking about taxes.
Well, with the current situation in Congress, are there any things that you think might change based on the intelligence that you're getting from your sources at Citrin Cooperman, regarding expected changes in tax laws as they may affect corporations or individuals, or because of the split on Capitol Hill in terms of the control of the Senate versus control of the House? There might be such a stalemate that nothing can happen, and there's really no need to be concerned on the part of business.
I can say right now, I am not aware of any changes on the horizon that we are looking at and thinking are going to come into play in the upcoming future.
Are there priorities that a business should be setting in terms of its financials? Should the concern be with running the business and making profits, or should it be avoiding taxes that's a driving force?
Taxes should never be the driving force. The tail does not wag the dog, I like to say. Business owners should focus on running their business. They should focus also concurrently on good communication with their tax advisor to look at doing careful tax planning.
What are some things that a large firm such as Citrin Cooperman can offer to a client in the way of tax preparation and other services that maybe a business has never been able to obtain?
At Citrin Cooperman, we have the luxury of the depth of resources. There is nothing that a client can encounter that we don't have somebody here that has either experienced it or has the knowledge to work through, be it the most complicated transaction, succession planning issues, potential nexus now because of the internet, cryptocurrency. We also, even if a client is getting involved in cannabis, we have a large cannabis department. We are up to date on everything as the landscape is changing out there in the business environment. We have the depth of resources to address it.
During the pandemic, the government was handing out all kinds of benefits. Are there particular things that a business needs to do in terms of the taxing and the accounting for any benefits it may have received to be sure that it complies with all of the regulations? And is that part of what you're seeing nowadays when you go into a client that there has been various government money coming in here and we have to handle that properly?
So clients should keep very careful records when it came to employee retention credits, the PPP loans, and whether they were forgiven. They should have all their documents available. And as a matter of fact, I always ask my clients for copies of those documents so that we have them for our files and know how to appropriately account for them at the end of the tax year.
Are the state tax returns these days as complex to do as federal returns are, or is the fact that you're starting on the federal return making it easier to knock out the state returns?
State returns are very complicated these days. There is no commonality amongst all the states. Certain states decouple from certain federal regulations, others different ones. So there's not a common thread amongst all of them. So you have to be very well versed. And when you get into depreciation issues and jurisdiction issues, it gets very complicated.
In your role of helping a business with handling the financial records, doing tax filings, setting financial strategies, and so forth, are there general principles, general pieces of advice that you start that apply to virtually all of the clients, or are things so specific?
I think that we always start with our clients about being transparent. We need transparency and very good communication with our clients, talking and proactive communication. The worst thing that can happen is that a client does a transaction or they're at the day of signing a transaction, has not discussed it with their tax advisor and finds out that, yes, that transaction may look good on paper, but when you look at the tax implications of how it's structured, you're not going to really walk with as much money as you thought you were. You want to talk to your tax advisor up front and be very transparent with them. That's the generality. The specificity comes into each individual segment, whether you're in healthcare, manufacturing. These days, there are nuances to each and every one of those industries.
So there's really no one size fits all in the tax code. Is that a fair description?
That is a fair description, except to say you're going to have to file a return and pay your taxes.
Speaking of paying the taxes, what is it that you enjoy most about the tax season? And I know it's got to be a lot of work, a lot of late hours, but certainly there must be something that makes it enjoyable, makes it attractive, and acts as a magnet to keep you in it.
I'm very fortunate that I work with a great group of colleagues. And so, as stressful as it is, we try to have a good time with it.
Is there any general piece of advice that you would give to someone just starting a business who knows nothing about taxes or tax responsibility versus the kind of advice you would give to someone who who's been in business for a long time and thinks they know just about everything there is to know?
I would suggest to anybody starting out to find a good tax advisor that they feel comfortable working with and get them in on the ground floor. Let them know what your business is and discuss with them how you're going to set up your books and records, how you're going to keep track of everything. Because I'll give you a for instance. I had somebody once who started a pet grooming business. At the end of the year, they had not kept any records as to the build out of their facility. There were tens of thousands of dollars that had gone into this build out, and it never dawned upon them that this was something that had to be capitalized. They thought they had a loss for the year. Well, in reality, they didn't.
So that's just something as basic as not knowing the difference between what should be an expense, what has to be treated as a capital expense, and again, where that magic word depreciation might come into the picture. I know you had mentioned a few minutes ago changes in depreciation regulations.
Well, oftentimes a business owner sees cash out the door as an expense, and the IRS sees it as a capitalizable item.
You know, um, how long did it take you to really come up to speed? To become so familiar with the tax code and regulations, and also what you don't know about the tax code and regulations, that has just made you an expert to go to for answers.
I was very fortunate in my career that I worked with a great deal of very, very smart people along the way who mentored me. And so I continue to this day to learn and grow. And there's always a plethora of information left out there to learn.
Is there a moment of satisfaction when you say discover a deduction that has been missed, or a way of handling something that's totally in compliance with the tax code and yet can make a huge difference in the size of the check that a business may have to write to the IRS?
Absolutely. Absolutely. When I know that we are doing a good job for our clients, I'm proud. I'm proud of the staff. I'm proud of the firm.
And if you could climb to the top of a tall building and shout a message or put up a billboard about what people need to know, and I say when I say need, I mean must absolutely know about business taxes, what would that message be?
Start early. You don't want to be the last person at the end of the filing season. Gather your documentation early, communicate with your advisor very early in the season, communicate with them throughout the year. There's no situation we can't figure out and overcome, but we need the time and the ability to go through everything in a detailed fashion. So find an advisor that you trust, keep accurate books and records, and communicate often.
Excellent advice. And Karen Henderson, thank you so much for joining us today on Citrin Cooperman's Corner Chats. I'm Peter Katz of West Fair Communications.